Hey everyone! Last week, an investor who follows my videos sent me a question. She asked, what are the best property types to invest in this year when looking at a 5-year horizon? That's a great question, but it's actually really difficult to answer because so much depends on each investor's strategy, risk tolerance, knowledge, experience, capital, and geographic focus. In this video, I'll share some quick thoughts on some of the advantages and opportunities driving the investment thesis of 6 different property types. I'll start with apartments. Fundamentals did retreat last year with vacancy rising about 190 basis points to 4.5% and rent growth slowed, a trend likely to continue in 2023. However, the US still faces a long-term housing shortage that should bolster rental demand over the next 5 years or so. Because the cost of home ownership surged, apartment rentals have become an even more cost-effective housing option. On a macro level, that will sustain multifamily investments over the 5-year horizon. Next up, retail. Although the demise of retail has been recited by the media for years, when you look at its performance, even during the pandemic, you'll see the myth that's been perpetuated. Neighborhood and community retail has held up well, with multi-tenant retail vacancy rates currently in the upper 5% range, roughly where they were before the pandemic, and average rents are up about 10% compared to 2019. Retail construction has been pretty limited for about 12 years now, so supply risks are limited. Given the cap rates that retail trades at, these properties remain well positioned for the 5-year outlook. Single-tenant net lease properties remain a popular option, especially for investors using a 1031 exchange to exit more management-intensive property types. The key ingredients have been the strength of the tenant, the length and term of the lease, and the property location. More, but not all, of the single-tenant property leases also include inflation escalators, which makes them more appealing than they used to be. But single-tenant net lease properties are favored as a more passive commercial real estate investment option that's backed by credit tenant leases. Next, I'm going to touch on medical office. This property type has some similarities with single-tenant net lease assets in that leases tend to run a long time, about 10 or more years. At the end of the day, the medical office outlook is supported by the large aging baby boomer population. As this 70 million person population group ages into their 60s, 70s, and 80s, they'll boost the need for medical office space, sustaining the performance of these properties. On somewhat of a different trajectory, traditional office properties are entering 2023 with a COVID hangover. A majority of the office labor force is still working from home, at least part-time, making it difficult for both investors and businesses to determine how much office space companies will need. That said, investors need to look below the surface. Downtown office space and Class A buildings have been the most impacted by this trend, while suburban office and Class B and C properties have generally outperformed expectations. Investors who think long-term and who are willing to make a counter bet have the potential to capitalize on the soft office investment climate. On the flip side, industrial properties remain a favored commercial real estate investment. The thesis is and has been that space demand will remain strong as the US economy grows and as e-commerce captures a growing share of the retail market. The outlook in some markets is clouded by the record 400 million square feet of space slated to come online this year, but development remains highly concentrated, with about half of the total additions landing in just 10 metros. We only have time to cover 6 property types today, but there are still some fantastic investment opportunities in other property types. Manufactured housing, self-storage, hotels, and seniors housing each have unique nuances, but when you consider the 5-year outlook, opportunities are out there. And that's the key. When you look at your hold period, it gives you the opportunity to look past the short-term bumps in the road. As always, investors need to keep their eyes on the horizon.